Welcome back, everybody, to Hxro Labs Live with your host, the man who just ate lunch and then left the dish in the shot, RT. RandomTask555 on Twitter. That's better. Almost. It's been a really tasty lunch, though. All right. Welcome back, guys. I killed one of my plants. It's missing. Looks like that one's on its way out, too. There's not enough light in the room. There's enough light in the world, just not in this room. We went all black. So apparently the plants don't like it. Bitcoin looks like shit. It's giving a little effort today up at key resistance. So let's take a look at that today. I am going through a transition. Relax. Not that kind of transition. I'm transitioning my trading plan to something that's a little bit more passive-y, investy for a number of reasons. So let's talk about trading plans today because you probably don't have one. Not because I think you're dumb, just because 99% of people don't. So I'm going to say probably you're one of those. I had a trading plan that worked really well for me during the last cycle. I had no kids until midway through the cycle. I didn't have any kids, no babies. And I had tons of free time, or at least time to spend on it. And so as that changes, major life event, you have to revisit your trading plan. As I get older, maybe I'm less, more risk averse. As my financial situation changes, right? All of these kinds of changes, you really have to go back and review said trading plan often, at least once a year, certainly once per cycle. And so I'm in that phase right now where we're going to talk about it today and what it means for this show, because, instead of maybe like looking up like swipey, high leverage, scalpy perp trades or whatever, which is what I've been doing a lot of this year, which is not really suiting me very well. And not even because it's like I'm losing a ton of money. I actually have this really stupid pattern right now where I make a bunch and then give it right back, like on the next trade the next day, the whole amount. I've done that 3 times now. So I looked, and then anyways, I looked through everything. I'm doing pretty well in the year, actually, almost halfway, more than halfway to my goal for the year. If I wanted to say this is what I need to earn this year. So it's not all that bad, but it feels like shit. It's stressful. I don't enjoy it, especially in the backdrop of like having some babies now to take care of and all this stuff. And it's also not the most profitable. If I look back at 2021, 2017, where was the majority of my gains coming from? It was coming from building positions in solid projects over a period of time and the market doing the work for me. And so that's what I'm going to be shifting into my trading plan, transitioning back into that. And in the short term, that kind of sucks because it's a long-term strategy. The good news is, and I had sort of an aha moment this past weekend because I totally unplugged. I might have checked the chart 4 times all weekend, and I mean literally like glanced at it, which is very low for me. It's usually like every 15 minutes. So it was a pretty big unplug weekend. It was Mother's Day. Shout out to the mothers out there, the ladies that are taking care of babies, and everyone else, everyone out of you out there has a mother somewhere. So it was a very special day. We spent it together. We had the kid, my firstborn, and it was great. And it was so relieving. And on Sunday night, I went to the desk and I kind of like set things up and I looked at some stuff and I was like, oh man, like we're kind of rallying. Let's flip over the chart. We're rallying into this resistance on sort of a Sunday night into a Monday. And I was like, damn, I should be thinking about shorting this, right? This is the kind of level that once lost, I'd like to look at as resistance. Now, typically my trade actually takes place more up here when everyone's kind of flipped back to bull while things are still technically bearish. And that's usually where like the best trade comes in. It came in here, missed it, came in here, missed it. And so that next one could come in here. I'm speculating. That's why I circled it. Anyways, it changed how I felt on Sunday. It's like I was in this like blissful state of just chilling and enjoying family and all this stuff. And then I got back into trade and I was like, ugh, that little bit of angst you get when you're just in a trade, that like awareness. Wasn't oversized. It wasn't terribly bad. Goes like worst case, lose some money, make some money, whatever. Anyways, I don't know. I learned that about myself recently only by unplugging and stepping away for a bit. I was like, damn, this is not how I want to feel most of the time. There's going to be moments in the market where I'll slide up the leverage and play with a little more focus and size and endure some more of that stress. And this just isn't it. And so what can I do? What can we do during this period of the market, which is ultimately like your washing machine cycle, right? I mean, we're in a downtrend on the daily. We're in an uptrend on the weekly. It's a bit choppy. We've had some downtrends on the daily just to get nuked higher. This time feels a little different than, say, March. Seasonally, it is much different. Selling may walk away, blah, blah, blah. Summer doldrums incoming. Market's typically pretty shitty in the summer. The moves happening in, the start of years, oftentimes at the end of years. So I'm not in a big hurry to put risk in this market. However, what can I do to be in position for the next bull? And actually, Beamish was on the show a couple of weeks ago talking about this and the idea of having like a tiny little futures account that he uses to entertain himself through the day or keep himself busy, keep himself sharp, but also preventing him from touching larger, longer hold positions. He also talked about the idea of selling half and a double on pretty much any of investment grade stuff and then letting the rest ride in certain parts of his portfolio. So let's take an example, because that's more what I want to do. Not necessarily the sell half and a double. We'll revisit that. I haven't finalized that part of the plan yet. But here's why it works really well, or can work really well. I'm going to show you an example on DYDX. So this is one that I wrote up. So here's where that sell half and a double can work really well, because, and you can look a lot of charts that come through one cycle, you get a lot of this kind of stuff like as a bottoming formation, right? You've seen that. And then oftentimes, and I'll pick on Syscoin. I love Syscoin for this. It was such a beautiful example. 3 years of that. All right. This is a pretty fat range, 3 years of this kind of like bottoming formation. Now, and then it went absolutely insane. Then it came right to a reload zone, and then it went insane again. And now look where it is. It's right back in that floor doing the same thing again. And so you think, well, if I sell half on a double and, I buy some here, I sell half on a double, I'm half out of my position and I miss the whole thing. That's one side of that strategy. You lose some upside potential. But if you can recognize the stage of the market we're in, which undoubtedly is, cyclically speaking, is the washing machine cycle. Doesn't have to last 3 years like Syscoin did. But going back to DYDX, we've already had it, right? So it's a beautiful example. It's in real time. DYDX hit this bottom sometime last year, I believe, like basically a year ago, June 2022. Yeah. Now, if I had identified, for example, like I am going to be doing now over the next few months, that DYDX was something I wanted to have a bag of, here was a little W. It even retested that W. I can get a position. Hey, look, sell half and a double. I got the perfect double banged out. Now I still have half that bag. So let's say I put in $1,000. Now it's worth 2,000. I take my 1,000 back. Okay. Now I have a free position, risk-free position in DYDX. I've got $1,000 worth and my cost basis is 0. If it goes to 0, I don't technically lose any initial capital. I would lose the 1,000 I had in it still, but that's the idea. Now look, reload zone, fat W. And it retested the W. It was even kind enough to do that. Now, was there a double in there? I don't know exactly. Let's go. So I'm not fully LARPing, but there definitely was a second double in there. Exactly from what level? Yeah, so getting long around this breakout is actually pretty clean. It did reload down here. So there was theoretically a second double. So you take that 1,000 that you had pulled out of it up here, you put it back in the reload zone. Oh, look, got another double. So now you had 2,000 long in DYDX. It turns into 4,000. You sell it. Now you've got 2 seeds back, 2 slugs of 1,000. See how this is working? Dip down to reload zone, buy some more, because it's easier to buy back down here when you sold the half, right? If you ride it to a double and then drop down here, you're not thinking about buying more. You're thinking about, I should have sold. Maybe I'll just sell now and take my $50 or take a small loss. So selling the half and the double gives you a position of strength to play for if and when this does dip down. And then it went on. Let's just, we're not going to pretend we would have bought the exact bottom. Let's say we could have bought some of a breakout retest. And then it actually went not quite 200%. So there was another double in here. So for example, you just take this strategy. It's $1,000 here. Now you're long 2,000. Now you're long 4,000. And somewhere through here in this reload zone, theoretically, could be, relonging the less. So by the time this bottoming phase finishes, if that's what it turns out to be, which is what it looks like, I could have, and this is the terminology Brian uses over at TRI, but like I could have a fourth, fifth, or sixth car working. In other words, I took that 1,000. I'm just very passively trading it through this muck, not caring if it takes off without me because I still have some, and not being greedy about it. That's the problem with this strategy. A lot of people don't like it because the greed gets in. You say, well, if it's going to 100x, why would I sell half on a double? Then I'm only getting half of the potential 100x. That's true. But in a washing machine cycle, which is where we're at right now with altcoins, you're getting this. And in that time, you're probably building 3, 4, 5, 6 car positions. And now you're sitting on there fairly low risk. You've generated a $6,000 long instead of one. I'm just using that number. Could be 100, could be 10, probably not 10 on chain with Ethereum fees, but you know what I mean? Could be 10,000, whatever. Point is, I'm building positions. And so in that sense, this year, that strategy for over a year now in altcoins has been working outstanding. And I know a ton of guys over at TRI who are building these positions, like what Brian said, own the market. So in that sense, selling half on a double can be very valuable as long as you're paying attention and buying back and all that stuff. And you end up building a very large, fairly low risk position. And then at some point, maybe ETH BTC breaks out of its 2-year range, which seems like inevitable to me at some point that this would break out of this massive range. And so maybe that's the signal for me to stop selling halves on doubles, to just let it ride for a bit. It's like, we're going into the next cycle. I'm going to take the wheels off. I'm going to assess my risk. Obviously, I'd like to have all of those positions be free by then. And then, So all that to say, I'm pivoting my strategies into a more passive investment, generating positions. Now, I'm not necessarily exiting all, scalp trading, leverage trading and stuff. I'm just really reducing it because I want to focus on other things. I want to have my time to work on projects. I'm doing some advisory stuff. There's a few projects we're working on through my fund. Like there's just a lot of work to be done. And actually leverage trading, being in positions, especially in big positions, like it just totally consumes me. And that may not be the case for you, but I've learned that about myself this year. So that's the pivot I'm making. And so it's really about how to find names, how to start doing some of this, getting that working, because I do think there's a pretty good chance. Let's look at another example of a coin I like. I don't know how big this range was if you're banging out doubles through this, but let's take a look. Looks pretty tight. I mean, almost. It's kind of spooky how close these ranges end up being to 100%. It's almost like a lot of people are using the strategy. But you wouldn't have got a double here. You would have had a double. So if you parked some capital here when you saw a W, you would have already banged out a double and reloaded FXS. So DYDX was cool because there's like 5 of them in the last year. Frax actually looks really good down here, doesn't it? Like just, so in that sense, Bitcoin and ETH look like they could really break down and shit the bed here, or get, it's a fake out, and then we recover and move. But altcoins are already coming into interesting levels. Like these 786s across the board just got pinged and bounced. Now, I don't expect, typically I won't trade for like a V bottom recovery, but something like this, where you get that W in the reload zone, and then there's like a little higher low to get long on. And then wherever it goes, I sell having a double de-risk, and then it can do whatever the fuck it wants after that. So I've been thinking a lot about that, and it's not as fun. It's not as flashy. It's not as sexy as just like buying gems and getting your 100Xs over a year or two. But the nice thing is it keeps you liquid. Let's take a look at INJ. It keeps you liquid, right? So you're constantly taking little bits of cash out of the market, which gives you the ability to constantly be buying new things that are down in those reload zones. Maybe some parts of the market are rallying, you're collecting capital. Other parts of the market are still sitting down in reload zones. They're dipping, you're building positions. And the idea is eventually you end up in a place where you own a lot of very low risk positions in a lot of very strong altcoins. Because I'm also going to be filtering pretty heavily for this strategy. I'm not going to just be like, oh, look, there's an altcoin in its reload zone. Like I want to see protocol revenue. I want to see use case. I want to see shiny new toys. I want to see things that capture narratives that are hot or I expect to be hot. There's more filtering that goes on with this, but my general approach to the market is shifting to a more passive investing thing, because there's also a lot of opportunities that I'm working on that like are longer term, and I want to put time and effort into those. So I think it's more about going towards this strategy and more about pulling, or less about that and more about pulling away from the kind of like consuming nature of trying to make money every day in a leveraged trade, where price of any given asset only has to move 1% or 2% in your favor and you've made money or lost money. It's just not how I want to do it. After further analysis, I've determined that that is not the way I want to live my life. So I won't. INJ looks like shit locally. It looks like a great reload zone, like a great candidate for this trade. I mean, everything we're talking about, this general strategy. Let's see what it did off the lows. There's 144% move there. So even buying like this W here basically pipped your double. So you got to have those orders working, selling half there, getting into a reload, probably banged out. Let's say, okay, wait for this little breakout, buy this kind of retest. I bet that was a pump chaser zone, right? So there is a lot of activity in this kind of trading, but let's see, like here, sold a second position. So double free. There's a lot of doubles in there. It was like basically 500% off the lows. And you'd have to be in there buying in January, which I was doing, just not on this coin. But I would have had a double, free position on Solana. I actually did. I banged out some free positions on Solana and AVX and all that, but then I looked up near, where they were, and I was like, I actually just want the whole thing back. I think I can reload this whole thing, because it just seemed too early in a cycle to worry about it taking off without me. So, yeah, when this thing comes back into some of these levels, outstanding candidate. So the nice thing about this pivot for me, the things I'm excited about, is now I can turn the majority of my day at the desk into like research, discussion, governance proposals. I've been working a lot in the BlockSwap Discord, trying to get some liquidity incentives or liquidity provisions and proposals. Like, for example, like this is some of the places I'm spending my time. And that can be really beneficial in the long term as I build positions in some of these projects, getting a little more in depth, and then just being less of like an in, out, up, down trader, because I am supremely confident in the future of this industry. And so I don't really want to worry about the day in, day out price action as much as having as many and as big positions as I can in as strong as projects as possible over the next 2 years. I mean, it sounds super obvious as I say it. It's like, of course you do. Everyone wants that. And this is just a plan that I'm going to employ to have that. And my day in and day out will be less exciting. And that's actually kind of what I want. I want, when I walk away from my desk, to not be giving a shit what the prices of any given assets are doing, because I have plans in place to buy, sell at certain levels in certain places and rotate and whatever. And this is a strategy that I've known about for years, and I tried it in 2018. I didn't really like it. It was too spread out. There was too many opportunities I was seeing while sitting in random coins waiting for doubles and stuff. And so this will be a lot more filtered and to the point. So like I may only have 5 or 10 positions working max at any given time. And I'll size them such that I don't really care too much about them in the short term. And then I'll also have rules and criteria in place where I'm like, you know what? There's ramping up volume. It looks fucking insane. The bull market's here. 10 coins just 10x'd overnight. I'm just going to ape into this thing now. Like, I'm done playing the nanny nibble daily double stuff. So there is a time to take the old breaks off. And I think that, I think we'll know when that time comes. So that's it. That's my big pivot. And I feel good about it. I feel good about not beating my head against the wall, because like after doing all my, kind of catching up on all my paperwork and tracking and all that, I was like, I'm actually having a good year. But for a month there, I was just like miserable. I was like, me. And then I'd have a big win and I'd give it right back. And it was just like, and now I did this again. So I wasn't very happy. And that's an important piece of all this, right? You got to enjoy it. Try to enjoy it at least. So it's really about coming up with a plan that fits your style, fits your time commitments, fits your whatevers, and then place your strengths. And I finally think that I figured that out after kind of talking about it on streams for like 2 weeks. I want to buy a panda, dude. We had that stream last Tuesday. I missed it. I was watching it. I was actually on my way to the hospital to visit the babies. And I was watching it and listening to it, and it was cool. I was like, fuck. Like, that's how you have utility for an NFT. I never, I've always scoffed at like the PFP projects because I'm like, oh, you got a picture. And I was always laughing at people like, what's on the roadmap? I'm like, being a fucking picture is on the roadmap. But Icebags is really interesting guy, super sharp, talking about building brands behind it and all that, and driving real revenue with holders and their point system. I don't know. It was really fucking cool. That was an eye opener for me. So I'm kind of sad I missed that chat, but frankly, I don't think I would have added much to it. I would have been just sitting there like, yes, yes, excellent, good, learning. But I did watch it, and it was very informative. I haven't bought a panda yet, but it might be time. I don't know. I got to go look at charts. I can't look at these NFTs and get a sense of like how I should be valuing them without a chart. And I think there's places to chart it. If you guys know a place to chart NFT values other than like the OpenSea little shitty line thing, please tell me. I'm such a noob to that shit. And you can even see them on TradingView, but they're always terrible looking charts. Like, they're not good. So shoot me a link to a tool, please. John McGuire asks, is the fib tool you're using different than the PCC pump tracer zone? Yes. So there's another one here. This is the more like original one. And I made a video about it. It's another tool. It's the main tool over at TRI. So just say like you have a big rally and it goes up to here. Then, you take from the start of the rally to the end of the rally. Same as the pump chaser zone, which is still on this tool. You can see it very faintly right here. But this is the reload zone. And that's actually where markets typically will go more often. The reason I created the pump chaser zone was because on higher time frames during an extremely strong bull trend, you don't get reload zones. I found oftentimes you do not get this. And so I was getting left behind, and I needed a reason to get long at a higher, more aggressive level during a certain period in the market. And that's why in the video where I explain the PCZ, it's like super important to identify your market state so that you don't end up just randomly buying 382s all the time, when in the end you could probably be waiting for levels like this much more often. So as far as like this goes, if we were in a rip roaring bull right now and Bitcoin and ETH looked really, really strong, which they don't, but if they did, I might say, yeah. And there's also still there's still a good chance that, there's a chance that INJ like chills in this pump chaser zone and then goes. But that's not even really how it was meant to be used. It was really meant to be like a touch and go during like an explosive move. And it works super well in those environments. This is not that environment. So in this case, we're seeing some confluence right at the 618. That's not usually a mistake. That kind of shit happens all the time. I would expect to see this thing touch this reload zone at some point. Fat end of the move, bearish market structure. Another really simple concept that I was on the show with Brian last Friday on their after party, kind of like live stream. And he talked about this. He's like, look, when you're not too sure what you want to do, you say, oh, is it a bull or is it a bear? Take your two highs that just created the market structure, which we're now working with, right, on the daily. It's bearish. And this trend line just becomes your bias. And when price moves through that trend line and forms a W on the other side of it, you're back in a bull. That simple. There's probably a ton of trades to take in here, but mostly in this case for injective, which I hear about it so much. I got to look into it a bit, but it's probably one that could make my shortlist for things to accumulate through this bear. How many of these levels are going to get fills over the next month or two before it does move through that, and before we can logically or reasonably call it like a bullish trend we should be thinking about getting really long on? I think I can build a position through this. Maybe it comes out the other side. Maybe it does this. Like, who knows how it gets there? But until it moves through that trend line that is defined by this bearish structure, I shouldn't feel FOMO for this coin. That's for sure. And then it's like, what is that little silly voice in your head that, it's like, well, what if I miss it? It's like, okay, what would that look like? Higher low here, breakout, still in the downtrend, but it breaks out. It's like, oh, no. And then, okay, if it did that, yeah, I'd have to buy it higher, but at least I know it's trending up again. It's through the trend line. It's made a W, right? So, yeah, given what I'm seeing on the majors, you see I circled this spot here. I think the short, if I wanted to really think about it, I am short BNB, the tail end of my scalp trading or whatever midterm swing. I mean, I'm in pretty heavy cash, and obviously, like Circuit mentioned on the stream last week, and we've talked about before, it's like, I mean, it's nice to make a little money going down too, not just be like, I didn't lose as much. So I was hunting for shorts on Monday in these kinds of like bearish throwbacks. It's a Monday. There's a Bitcoin conference in Miami. There's a few things. It's seasonal. There's all this stuff. DOJ, like we're in the fight you face. I don't see any reason to FOMO into this market. I see tons of reasons to be de-risking at bearish retests until that doesn't work. It usually works early and stopped working as much later. So this is technically the first major, bearish retest since the daily breakdown. So I'm not fading it, but I did circle that same downtrend line kind of concept I showed you on Injective just now. If we were working it on Bitcoin, it's the same kind of idea. There's not too much reason on a higher time frame to be super excited about Bitcoin until it moves through this trend line and forms a W on the other side. And that could happen at whatever price, at whatever time, but objectively, until it happens, I don't need to feel a sense of FOMO about being on board. So if we do get up here, take this high, take this low, that is where on a daily time frame, the next area to be thinking about shorting for me would be. But on lower time frames, I did zoom in and find some reasons to take stabs right here. BNB, interestingly enough, is actually outperforming the downside this fine day. So this was actually, I posted this in the pit yesterday, like right here, and it was just feeling ugly. Like typically you want to see kind of like a spike up into these short reload zones and then drop like we did here. So to have that drop, to have that sort of bearish structure, even though the right is a little higher than the left, like wasn't clean, but to have that fail and then to just like, it looks so strong locally. And then it was just chilling. It wasn't failing. And I was like, I'm probably just going to get nuked here. Like thinking at least, this was my stop loss. Like I was pretty sure up at these highs that I was going to get stopped out, but it's a plan. It's a trade. Take it and leave it. And thankfully the gods were kind and it just did like a little sweep and fail of not even this level. So maybe a little internal weakness there. And it is now broken down some key levels. So if we squeeze up here a little bit, I'd like to add to this one. I haven't moved, stopped to break even or done anything changing it yet. I probably will today. But yeah, BNB, DOJ cracking down on exchanges, BNB the number one target. Those are not the reasons that I took this short, but they are the reasons why I would want to maybe add to it instead of, rushing to take profit while we're still technically right in that short reload zone. It's more of a midterm thing, right? So if ETH and Bitcoin break down, what are alts going to do? What's BNB going to do? Is there buzz about some issues around BNB and the DOJ? Like, I don't know. They're certainly a target. I think they're pretty impenetrable, but that's just because they have been thus far. They might have an Achilles heel. Who knows? No matter what, they have a massive war chest. I'm sure funds are Seifu. And I'm sure they would be able to drag any kind of bullshit like that through courts for years. So I don't think, but would that create a downside in an accelerative way versus maybe even Bitcoin and ETH? I think so. Possible. Anyways, I completely abandoned my idea if we go above this level, 1675. So Synapse. Yeah. You know what's interesting about Syn is it's one of the few DeFi protocols that I actually use. Go take a look at it. Synapse. Ooh. So yeah, this one's down in the reload zone. You can see my patience is paying off because I haven't bought any, but it just keeps going lower. It's right at the 88.6. So I generally love this idea. And do you see here, like we're going back to like talking about when not to use the pump chaser zone. I mean, look, if I used it here, okay, but I just would have got stopped out. It did kind of like bounce off of it, but then it failed. Then it failed and bears retested like so. Yeah, it wasn't the time. Clearly, it's also like on chain. I mean, it still kind of works, but I prefer to get much more liquid, centralized exchange type trading coins to use something like the Pump Chaser Zone, like more perps. It's a little trickier to use on chain. I find that TA is just a little more messy. Slippage, wicks, whatever. Yeah, Synapse looks outstanding down here, sir. Thank you for the idea. I'm gonna add it. Main watch list. Okay, really nice. And to have this kind of come into these lows and get some nice volume just shows that there's some interest at these lows. The last volume, these lows. Well, more just on the way up, but either way, there's a chance, there's a case to be made here for some bottoming. I'm not going to rush in and buy it today, but building a position here, that's the thing. So with that little old lady approach with like the selling halves and doubles, I don't necessarily like, it's like, okay, you have your W, you broke out, you've come right back in. Like I could just buy here for like one slug, smaller slug, whatever. The whole strategy is about smaller slugs, but and then where's my double? It's like right here. And then I'd have a free position in SYN for the entire next cycle. And if it comes back down, I could have a second slug. And if it goes back up, I've doubled my free position. And it goes, and then we would just play this game for the next 6 months. So there's actually a really good potential for such a thing. The thing is, and this is what drives people nuts in that strategy, is like if it does break down these lows, it's not necessarily a stop loss. Typically with that strategy, you're like sizing such that you could ride the entire thing to zero. And then obviously you're picking projects that have other reasons why it shouldn't go to zero. For example, does this thing have crazy emissions still coming? The market cap is higher than the FDV, so that's weird. Probably an error. I don't think that's possible. Is that possible? I don't think that's possible. It's got an inverse dilution effect. I don't know. But yeah, lots of little research to do. For me this week, the focus is just like hammering this trading plan like into a Word doc, sussed out with like goals and strategies and allocations of funds and timing and a lot of work. It's a lot of work, but then I'll just be humming once again, which is nice. We went over to BTC Miami last 2 years, 15% down in 22, 20% down in 21. Yeah. So here's the thing. Full Stack Creative in the chat basically saying like BTC Miami's always been bad. If it's in May, that makes sense. May is typically a shitty month. Not always, 2017, 2019, but mostly. One of the devs tweeted almost there recently. They keep giving off SYN stable maxis as reward. Okay. Which makes constant sell pressure. Hopefully this stops. Yeah, there's been some fundamental thing about Synapse where I didn't load up. It just kind of seemed like a really hard. So like in this case, it's either going to do one of two things. It's already had 2 doubles, right? Could have had 2 cars loaded by now. That's fine. Not worried. So this is like where to load for level 3, or this is where the lows break and we go into deviation. Let's hope. But the funny thing is I actually use Synapse. It's one of the few things. Now, I don't need SYN tokens to do it, so it's kind of weird. I go over and I use the bridge and they get some funds. I'm hoping those fees I pay go somewhere to SYN backing or revenue, but who knows? It could just be a great product with a shitty token. I can't speak too deeply to it. But let's look, guys. There's really 2 things. I mean, there's all kinds of things that can happen here, but there's really 2 things I see. Either this is like this shitty sort of, failed breakdown and we get back in range and it's like, oh my God. And then, we do some fun shit. Less likely. Or we've just confirmed this bear trend for now. And like, they typically are not too nice and easy, right? They typically just get like an FU shakeout. To me, this looks like we've done a mini cycle within a bigger cycle. Right. So we had sort of like a disbelief rally, like this rally will fail like all the others. Oh, and then we definitely had some euphoria in there. We even had the meme tokens come in, the craziness, the ridiculousness. We had a complacency shoulder, and now we have anxiety. So I think it would be unlikely for us to escape from here without some panic and without some capitulation, and then summer doldrums or some anger and depression. September, and then, oh, would you look at that? We're right over to that trend line that we talked about earlier. Really like that in this case. And September is usually pretty shit. That could be depression. That could be the final, whatever. All conjecture, guys. But this is just, here's the W here. Here's where you get the win. Because of this strategy that I've described today, that's a lot more passive, focused way more on next year and the year after as far as waiting for rewards for that. And in the meantime, just farming out positions and getting my initials back and then doing it again. The nice thing about my approach right now, as I see it, and it's easy to say today because we're under resistance and, it would be a lot harder to sit here and say this if we started fucking mooning and I'm sitting in cash. But I'll cope and deal with it. And probably just buy the breakout. Okay, so point is, there's a W in here because no matter what happens through this, how we end up getting through this trend line, whatever, it's summertime. And I've got some kids. Even if you don't have kids, like there's fun things you can do in your life. And so identifying when is a good time to spend all of your time sitting there trading, trying to make it, and when it's time to maybe pull back, use more passive strategies, keep tabs on the market, research, read, support, governance proposals, whatever it is that could move the needle on some of your bags. Recognizing when it's time to like pivot between those two things. Because I guarantee you in 2024, 25, like I'm going to be loading up my futures account. If there is such a thing in Canada anymore. But like I'll be taking a lot more octane, higher octane breaks off. Let's go. It's just not that time for me right now. And I don't think it's that time in the market. And there's just such a high probability of like what we just talked about, like that kind of shitty summer. And so it doesn't have to be a shitty summer, I guess is my point. Less dopamine, but it could end up being the summer. And these dips could end up being the dips that lead to the greatest gains that we've ever seen in this market. Possible. So, it's super cliche. And I used to hate it when I was newer in the market. And I'd see people be like, oh, I love it when price goes down because it just means I can buy more. I'm just like, shut the fuck up. Like let the price go up. I've already got a bag. Because I wasn't positioned properly and I didn't have a plan for it. And so it sucked. I was just underwater. And every time I bought more, it went down more. And I wasn't probably not the best coins. So positioning for that. And, in many ways it feels late right here to be rushing off to cash. It certainly feels uncomfortable. I didn't, I was stopped out of most of my longs a little bit before that, but, it may not be, I don't know. I feel like I'm like tiptoeing into like what other people should do with their money. I don't fucking know, dude. All I know is that this could go a lot lower. And then this would be like, hey, I got out during the first major bearish retest after a market fail. Might not be so bad. Or this is the dip. We should be rushing to buy. So I don't know. I think that's much less likely. I think I can get positions built up across the board in some really sexy positioned altcoins for the full next cycle. And I think I can do that over a period of months here. So there was a little bit of discomfort yesterday, I'll be honest, right here. We kind of like retook this key level and then we bounced off it and we started to go. And I was like, oh no, did I just, am I not long? Cause like I had a pretty sweet setup here, not on Bitcoin, obviously it got stopped out, but on ETH, it made like a perfect higher low on Friday. And I watched it happen on the 1 minute. And I had just told myself, you're not a leverage trader anymore. Just relax. And so I didn't take it. I was trying to be disciplined. And I was being disciplined. It was also going into Mother's Day weekend. Like I just didn't want to be in some fucking, big position. Anyways, it hit perfectly. And then just was like, boom. And so this was a little uncomfortable yesterday. But I ended up just shorting BNB and so far it's pretty good. Now to have retaken this level like that, and then failed, lost it, retested, and gone down, that's like more bearish than if we had just not retaken it at all. It's kind of like there was every reason to have some nice breakout from here, and the market just doesn't have it in it. So further to my point, feeling pretty comfortable just being, more risk off right now for a little while. Objectively speaking, there is no reason to think that this has to shoot up from here. And like I said, if it does, a new setup will form from some higher price at some later date. So hope this like makes sense to, I feel like I'm beating a horse dead here, maybe even going in circles a bit, but it's just, it feels good to have at least positioned myself. The unknown and the chip chop and the in out just drives you insane. Having really zoomed out and just looked objectively through the market and what I expect for the next cycle and whatever, and what we can look at and expect from history. The fact that we are clearly under attack as an industry. There's just so many reasons to think that this summer doldrum could be pretty nasty. And at the very least, super boring. Shit can chill down in these reload zones for months, right? And so, like, even if we get a little tight range there on something like Synapse, like, I don't need to be trading that too aggressively. And I guess the last thing I'll say about that, and this is just like general kind of market structure stuff. Let's go to a different chart. Typically, I don't think I need that. Typically in markets, the bases take a long time to form, right? So you get like a fast up at the peak and then a pretty hard down and then a series of low volatility. Oh, look, more down, low volatility, building a base, breaking out. So we've had the harsh down. We had some low volatility, really just finished the down here. Yeah, like I just don't see us like shooting straight off, obviously. Like whatever this down looks like, how low it goes, I don't know, not calling it. I'm just saying, like, once this does go down for a bit, it's probably going to have a period of low volatility. The summer of 2023. So there's some trading to do here for sure. Definitely leaning bearish bias for a little while. But after that, it could very well be a really boring period where, I'm actually thinking of this on the way up. I'll never forget this. For whatever reason, what was this? Was this summer? Yep. May, June, July 2020. So going into like the end of July, this was torture. I remember this distinctly because I just started working at Hxro for Hxro Labs or whatever, right here. And so I was doing the streams, I was doing some newsletters, I was putting out content, whatever it was. And like price didn't move for like 3 months, really. So I was just paying like extra close attention at the time. And I just remember like it was just abysmal. And then you have a breakout and it was just like, nope. And then you start building a base, you have breakout, nope. And then finally, when you've just lost all hope for humanity, it just like moon. But then it still sucked and it still took, most of it back. Like this was crazy. So yeah, there's going to be a lot of noise, even if you do want to take the 19 fractal, we didn't quite go high enough yet. So there could be one last blast, but even in that fractal, like, pretty shitty. And then of course, Circa's got a bet to, did we freeze? Nope. We're good. Circa's got a bet that there'll be one more like 1 day 40% dump on Bitcoin sometime before the next like cycle highs or whatever. So I'd be curious if we get that. I think so. So I guess all that to say is if I was a bet man, I'd say pretty soon here we're just going to see a big fuck you dump. So who knows, dude? I'm not focused so much on catching that as I am on everything else I've said this stream. Building up communities, building up positions, loading my bags, selling halves and doubles, building free positions, all that good stuff. And if I can make a little money shorting this retest or that other level that I talked about on Bitcoin a little higher up, I will try to do that. It'll be leveraged. So I'm not doing none of that stuff. I'm just like minimizing. I'm not making it my day job. I'm doing it from my day job. This is not the chart. There it is. Yeah. So like, yeah, there's really two setups as I see it. There's locally one kind of already fired though yesterday, sadly. And so I've got that on BNB. But then, if we do break back into this, I wouldn't rule out some shenanigans around this. And it probably won't be clean. And, if it did happen, it could easily just be like, ugh, ugh, and then, whatever. Who knows? Cross that bridge when we get to it. But I like this level for an area of interest for me, higher time frame to snipe thinking shorts. But otherwise, BTC Miami this week, as you pointed out in the chat, some really massive dumps during that. So bottom line is, it's just not a time to feel FOMO. It's certainly, like, I felt it for a few weeks. Getting back into cash is a really uncomfortable thing for me to do, especially after having made some really nice returns this year and obviously seeing a ton of upside in this market. Getting back into like 40, 50, 60, 70% cash position, I don't really know exactly where I'm at right now this minute. Let's go look. 36 plus 24, 25, 60. What is that? Help me out. 37% plus 25%. 42. Oh God. 62. 72. I'm not good at quick math while people are watching me, guys. What do we got? Anyways, that's my two stablecoin positions. 25% and 37%. 62%. Okay. There we go. So I'm like 62% stabled. And that's uncomfortable, especially when you've got altcoins that I think are super exciting sitting down in reload zones. So I got to get this plan in action because I actually do want to do some light positioning through this, even if I think, some of these majors can like really roll over. The slug size stays small. So there's no reason I can't nibble on some of these names down in reload zones that I'm pretty sure are going to do very well through the next cycle. And that way, if it does happen to reverse here, I've built my first cars and I can take my doubles when they come. But if they do dump way lower, I can be doubling those positions or whatever, right? Position of strength. Don't be all in or all out. So I'm going to wrap up here today in the next few minutes. We're going to go and type in my trading plan because I basically just outlined the entire thing for you guys here today. And yeah, I hope some of that helps you guys think about your life as a trader, investor, participant, whatever you are, shitcoiner. Thinking about it really in that framework of like, have a fucking plan. Because if your day consists of like, show up on Discord, start typing things in, saying hi to everybody, randomly taking action, not tracking anything, not journaling anything. I admittedly don't track and journal enough, so I'm getting back to it. But I have gone through that process for like 2 years. I did it religiously. If you just kind of move randomly through the market, you could do well. You could get lucky, but it's very suboptimal. Is that what you want to be? You want to be suboptimal during what is potentially the largest emerging market, kind of like bull market generational thing, blah, 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 in our lives? I don't want to be anything but optimal. And so I'm optimizing. This is my year of optimization. I've got a lot of moving parts right now. And the big one is just revisiting that plan and reassessing how optimal it is for my life right now. And then everything else we talked about today. I won't go over the whole thing, but yeah. That's the thing, right? Selling halves and doubles is good for the stress levels. And that's what I was finding was not good for me lately. It was just the stress of different things going on. And then just being a little too consumed by local price action. And I'm much better at trading massive trends or, swings. So swing trading was my bread and butter. The thing with that is you gotta be patient. 4-hour setups, daily setups, weekly setups, they can take months to form. And so what do you do in the meantime? Yeah, as Beamish said, 5% your portfolio, a little scalp account, have some fun if you want. I don't even want to do that as much as like revisiting some of the more grassroots type work, like getting into discords that I'm already in, just not being as active in, and like helping push narratives and teams and projects forward, whatever that is, through governance, proposing. Like BlockSwap is the one I keep referring back to because it's so early in its life cycle, and they're literally like, what do you guys think? Where should we put our liquidity? Make a proposal. I'm like, oh shit, like Bunny sounds dope. So like we're really in there trying to help. and deliver. So I can spend my time doing that kind of stuff day to day and let this shake out a bit. And hopefully it's a great way to stay in shape. And really getting ready for the next cycle. If I can position optimally for that, then a year of not nailing the moves, if we do move higher here, or if we do move lower, or if we just chop in like painfully down and sideways for the next 3 months, likely, then none of that matters, right? As the next couple years come. And then, of course, we have to entertain the possibility that the next couple of years could suck. They may not be the bull cycle we all wanted. They probably will be, but they may not be. So being patient and a tactful approach is even more important. But I'm probably going to just fucking moon here in the next couple years. So we'll be getting ready for that. It's a beautiful day outside where I'm at. Hopefully it's nice weather where you are. Don't forget to touch some grass today, and whatever you do from now until next time, always play from a position of strength. Take care.